We're going to take a look at global energy commodities now. Israel has intensified airstrikes in the Gaza Strip after Israeli Prime Minister Benjamin Netanyahu rejected a ceasefire offer from Hamas. Oil prices did respond, actually, on tight supplies, not just on the Hamas and Israel conflict, but also downtime with U.S. oil refineries in gasoline and diesel production, as well as a Ukrainian drone strike on a Russian oil refinery. So Brent was up, WTI was up, but natural gas down significantly, 365 basis points, and RBOB gasoline down mildly at 31 basis points. Let's take a look at what's happening in global equity markets around the world. Well, Nigeria's stock exchange continues to experience mild price correction, although recovering this week after the price correction, the massive price correction, I would say, we saw last week. The all-share index ending the week up at 101,858.37 points, up 62 basis points. Deal volume at a little over 8,000, values at 7.35 billion, and market capitalization still well above the 50 trillion naira mark at 55.7 trillion naira. Let's take a look at European equities. Wow, it was all red there. The bears had it. Still a lot of uncertainty in Europe around the trajectory of rate cuts. Of course, we know the ECB under Christine Lagarde held rates constant. The EU is still pushing to find that sweet 2% inflation target like many other European countries, including the UK, but the market's not really reading the signals from ECB policymakers too well. All the major indices, Euro Stock 600, FTSE 100 in London, DAX in Germany, CAC Paris, IBEX in Spain, they were all down at the end of the week. Is Wall Street going to fare any differently? Let's take a look. Wall Street, there we go. The Dow Jones Industrial Index did end the week mildly down at 19 basis points, but S&P and NASDAQ Composite Index were up, still very buoyant. Of course, corporate earnings from the tech world have been released, quite a lot of layoffs, and markets tend to respond quite positively to tech world and corporate layoffs, which might be seen as a sign of efficiency. So a mixed outlook there for the end of the week from the North American equity markets. Well, let's take a look at my top picks in business this week. The first one is that Turkey's central bank governor, Hafiz Erkan, the young lady at the helm of the Turkish central bank, has resigned amidst allegations of abuse of power. She was supported by Turkish President Erdogan, but there were concerns around nepotism and cronyism. Now, those haven't been proven, but she did resign, saying she didn't want the country and the policy-making environment to be, her issues to be a distraction to Turkey's economic policy plans. Turkey, of course, facing massive inflation, 65%. Under her short-lived tenure, actually, she increased loan rates from 8.5% to about 14%. So there may have been a constituency who weren't too supportive of that. She's now been replaced by a new central bank governor. His name is Karahan, a Harvard-trained economist, 42-year-old, who is also supportive of free market policies and may eventually set the country on a more stable economic footing. But, don't hold your breath. Let's see how that pans out, because inflation at 65% is pretty high. South African entertainment giant MultiChoice, of course, the pay TV satellite giant around the continent, has turned down an offer from Vivendi-owned French media giant Canal Plus in a buyout. Now, Canal Plus had offered about $1.69 billion for the purchase of shares, additional shares actually, in MultiChoice. It already owns about 31% of shares, but MultiChoice is saying that the offer is well below the value of the company. And Canal Plus is saying, well, that's about a 40% premium to its own valuation estimates. Now, they didn't reach an agreement. MultiChoice has decided not to move forward with the buyout. So the African continent will not be seeing the emergence, at least in the short term, of a major entertainment giant on the continent. But I think what this highlights is that that industry is still thriving, and there are real acquisition opportunities on the continent as subscriptions obviously increase. Qatar has entered into a 20-year LNG deal with Petronet of India. Now, Qatar is on a roll here. Of course, it's one of the biggest gas suppliers around the world. It produces about 107 million tons per annum. of which 7 million tons is exported to the Indian market. So this Petronet deal is actually a renewal on a 20-year deal that was struck many years ago and is due to expire in 2028. Petronet, India actually imports about 31% of its gas requirements from Qatar. Interestingly, if you recall, about 2 years ago, a little over under 2 years ago, Qatar actually signed a 27-year deal with Sinopec of China, and it's entered into other deals with major IOCs and oil and gas companies around the world, all multinational. So good news there for Qatar and good news for India in securing gas supplies for the long term. Nigeria's president has signed the Electricity Act Amendment Bill. This bill was originally passed in 2023 by the House of Reps and the Senate. And of course, a key provision of this bill is that 5% of the operating expenditure from GenCos, generating companies, will go into host communities, into a host community fund. And that fund, the management of it will be by a trustee, which will be determined by the host communities and the GenCos. So 5% of OPEX from generating companies from the previous year will be plowed into this host community fund, mirroring something similar we have on the hydrocarbon side with the Petroleum Industry Act. But good news there for host communities. This bill, of course, also provides for the decentralization of the electricity market across Nigeria, across the entire value chain. And of course, state governments can issue private licenses as well to investors who want to come into that market. And finally, TotalEnergies is saying it will exit its 10% minority share in Shell Petroleum Development Company. Of course, we know that SPDC had previously, some weeks ago, divested its 30% holdings in the Onshore joint venture in Nigeria to a consortium of local companies to the tune of $2.4 billion or thereabouts. Now, Total is saying it also wants to exit its 10% stake in that joint venture, but it's not entirely exiting Nigeria because it's still in Nigeria's offshore region. And in fact, recently announced the coming on stream of the Akpo field, which will be producing about 14,000 barrels a day. TotalEnergies in Nigeria upstream currently produces around 219,000 barrels of crude oil every day. So it's important to bear in mind this is an exit from an onshore joint venture. We continue to see these moves for mergers and acquisitions and consolidation in Nigeria's onshore region. That's it for my top picks for the week.